Reaction from the panel. Charles, it was worse than you expected. However, you got it right in terms of where the job growth was. You were right on services.
Yeah, and construction. And you can see pent-up demand in housing market. Take out the 11,000 from government, so we're closer to about 170, almost identical to ADP. It just shows a bifurcated economy, where professional businesses up 67,000, but again, manufacturing down, mining unchanged. We've got two different countries, and it's reflected in the electoral map as well.
And average hourly earnings only up 0.2%. The expectation was for a 3% gain, 2.6% year over year. It's not as bad as it could be, but come on, people, we should be looking at 4% plus in terms of wage growth in this country. And it's disgraceful that we've had to put up with that for so many years.
Big disappointment for you on wages?
Yeah, I mean, right before Peter Barnes took the hit, we said 2.7% was really the expectation. 2.6% will fall in line. People will be fine with that. I don't think it's really a big shocking number, but I think the construction number is lending credence to the housing starts numbers we are seeing here on the domestic economy when it's trickling through in the real estate market.
Jack, how to look at these markets? Completely reverse course. Earlier, we were expecting a decline of 30 points. Now we're going to see a gain of 30 points. Is this all about anticipation of the Federal Reserve not raising interest rates? Because once again, the jobs market is slow.
I think so, because one of the things that has put a damper on the markets this week was not only Deutsche Bank, but also this talk that maybe the easy money flow is going to start to slow down, the ECB not being quite as open with money as everybody loves in the markets, and all this inflation in the markets. So I think that is what's going on. But to me, what was interesting is the unemployment rate ticking up.
Yeah.
What I want to find out is, why is that? I hope it's because more people came into the jobs market. I mean, one of the
that's what he said.
One of the really weird things right now is I've got the JOLTS numbers here, and the job openings are at all-time highs, and people are not taking them.
Well, it's not that they're necessarily taking them. It's the skilled labor that's not there. So people are applying for these jobs, but they don't have the skills. So employers aren't doing that because employers are focused on profit margins. They want to have somebody in there that can actually produce, and they don't want to have to teach them.
Definitely part of it. I mean, there's no question there's a skills gap, but the numbers are too big to be skills gap alone. There are clearly people who could be working who are not working.
It shows a tiny bit of optimism, and I know Charles will agree with this, that the labor participation rate, as Peter pointed out, we were looking at it, 62.9% is up a little bit. So you have people
hit the bricks.
Who are coming out saying, hey, I'm ready to look for work, although there weren't enough. That's why the unemployment rate ticked up, is there weren't enough jobs out there for those people looking.
To go to Maria's earlier point, there was a 64% chance of a Fed rate hike in December before this, so we'll have to look at the Fed funds future market to see where that's pegged at now. I'd be surprised if it moved down significantly. I think the Fed has already talked and walked the market into a Fed rate hike.
I'm glad you brought that up. Then what is the Fed looking at? The Atlanta Fed has now marked its growth for this quarter, for the third quarter rather, at 2.2%. They'll probably take it lower now after this jobs report. We were looking at almost 4% growth when their initial assumption. So what is the Federal Reserve looking at? What robust economy do they see that average people don't see, and even their own peers don't see?
I think to answer your question, I think they're looking at the market. You see their policies. They were a wealth effect. They wanted the stock market to go up, and that was what their policies were directed at. That's what monetary policy that they've done when they've done bond buying purchases.
And they might have
Guys, let's look at this market right here.
It doesn't move the needle on Main Street
We're
anymore.
losing it quick, okay? Futures went all the way up, better than 30. Now, as you see, the major averages are around break even here, and the industrials only have 15 points. July's payrolls were revised. Steve Moore, your reaction to this report?
You know, it's perfectly consistent with 1.5 to 2% growth, Maria. We're in this zone. We haven't been able to break out of this zone now for 6 or 7 years. When you get 150, 175,000 jobs, you're in that kind of slow, moderate growth range. And just politically, I just don't think that's enough for the American people. The other point I want to make on wages, I've made this point on your show before, but it's worth repeating. That wage number is average wage, and there's a big difference between an average wage and a median wage. So what we're seeing in this country is people at the high end, Maria, are getting pay raises, and they're doing really well. The people in the top 20%. This doesn't mean that middle-class wages are going up, and in a lot of areas, middle-class wages are going down, whereas at the top, they're going up.
Jack Brewer, your thoughts?
I'm a small business owner, and I think that was reflected today. You saw, the number came in where it was at. I was almost dead on. I expected it to be here. I'm hesitant until this election, until I understand really what taxes are going to look like in this country. It's tough to go out and continue to employ when you don't really understand the future.
Jack, is it more important for you as a small business owner to see regulations rolled back, or the corporate tax story get more favorable? What's going to really move the needle on small business? Because you look at these two economic plans on the campaign trail, and Donald Trump keeps talking about rolling back regulations as the real secret to moving the needle on jobs.
Regulation is big. For my business, it's huge, and we have to have, some common sense regulation reform, but we do need to roll back. I think we've hit it aggressive over the last 7-8 years, and now it's time to let our economy grow. And I totally agree with Trump on that. I don't agree with a lot that he says, but in regards to regulation, I definitely agree.
Yep.
Yeah, I think the major point that needs to be taken here is that the U.S. has one of the highest tax brackets in the developed world right now. We're starting to see the sterling's down 17% this year. That's why you're seeing the FTSE 100 up. You're also seeing them move their tax rates down. In order for us to be competitive and to add more jobs, we are going to need tax reform, as well as remove some of these regulatory overhangs, and that will add more jobs to the economy.
Can I raise one issue? Are employers more hesitant to hire when you're coming up on a presidential election? That if you have a need to meet demand, if it's the holiday shopping season, that's something altogether different. But if you think that the world is going to look differently in terms of policy in a few months,
I agree with you. I think there's that certainty issue, whereas once they have certainty, a lot of stuff's going to come off the shelf. Right. There's a lot of things right now that are on the shelf, whether it be deals, whether it be investment plans. Once they know, and that is whether it's Hillary or Donald Trump.
Because you don't know if the minimum wage is going to go up. So if you're a small business owner and you're trying to hire, you don't know if minimum wage is going to be hiked up. You don't know what's going to happen with Obamacare, if the cost of those increases. So you can't make business decisions until you know what's going to happen with this administration.